everyone, I'm Gurleen. I hope you're all doing well. In today's video, we'll be discussing the trade plan for Wednesday, that is May 10th, 2023 for Nifty as well as Bank Nifty. We'll also discuss a few select stocks wherein good risk to reward opportunities are brewing up. So be sure to stick around till the end of the video and don't forget to hit the like and subscribe button and do ring the notification bell so that you never miss an update. So without any further ado, let's dive in by looking at the technical perspective of Nifty 50 on the daily time frame. So as we discussed in the last video that Nifty was placed right at the resistance zone of 18,270 to 18,300 and it did try to break out of the range, but here you can see a bearish candlestick which depicts that the price was not able to sustain at the highs and Nifty saw selling pressure from the overhead supply levels right over here. Now that Nifty has fallen back into the range, it's likely that Nifty might consolidate within this range of 18,040 to 18,270 or 18,300 with spikes on both the sides. Now considering the overhead supply pressure, it's possible that Nifty might expire below this level of 18,350 for the upcoming weekly expiry. So all in all, looking at the overall structure, the near-term hurdle for the index is placed at the levels of 18,270 to 18,350 and the maximum downside levels look capped at 17,720. Now let's take a look at the hourly time frame to understand the trading approach. So as we discussed in the last video that if Nifty breaks above the 18,270 mark, then the upside target can be considered in the range of 18,350 to 18,445. So here you can see that Nifty did achieve the initial target and thereafter we saw selling pressure coming in. So here you can see that Nifty has tested the moving averages and till the time Nifty is placed above these moving averages at the levels of 18,171 and 18,241, we can expect sideways to bullish momentum to continue. Now you might ask that what if Nifty breaks below these averages? Well, in that case, we can expect the index to test the levels of 18,000 on the downside. So the trading approach is simple. First of all, longs should be avoided at this point, and if you're looking to build longs, it should only be considered above the level of 18,300. On the other hand, if Nifty breaks below this moving average at the level of 18,241, or for that matter, you can even consider today's low at the level of 18,229, then we can expect a downside target of about 18,170. And here, if the setup gets triggered, then I'll be considering an invalidation level of about 18,345. Now, if Nifty also breaks this level of 18,170, then as we discussed, that the levels of 18,000 would open up in the index. But let's see, it's a wait and watch setup. So wait for the setup to get triggered and only then trade in the direction of the trend. So for Nifty, the support is placed at 18,170 followed by 18,040 and the resistance is placed in the zone of 18,270 to 18,350. In Bank Nifty, it will be right to say that as above, so below. Well, that's just on a lighter note as it was an interesting session today with the volatility at peak. So let's take a look at Bank Nifty on the daily time frame first and then we'll move ahead with discussing the trading approach for tomorrow. So as we've been discussing over the last two videos, Bank Nifty traded within this range of the wide candlestick as we anticipated. So here, as the range is quite wide from the levels of 42,582 to 43,588, so again it's likely for Bank Nifty to consolidate within the same and thereafter might catch on to an aggressive trend at the breakout or the breakdown of the range. Well, an important point over here is that when any index, stock or any instrument for that matter trades within a range, it's always better to sit out and wait for a clear trend to emerge so that you do not get stuck at the wrong side. And here the example is right in front of you. So what really happens in these wide ranges is that the volatility remains elevated and it's easy to get stopped out. With that being said, you might be thinking then how to plan your trades. Well, let's understand that. So here on the hourly chart, as we discussed in yesterday's video, that within the range, if Bank Nifty moves above this level of 43,300, then a target towards the levels of 43,588 can be looked at. Now here you can see that the target was missed by a few points. Thereafter, Bank Nifty started a move on the downside after being rejected from the resistance level of 43,555 as was mentioned in the last video. Now here you can see that Bank Nifty, after having having rejected from this resistance level of 43,555, it started a move on the downside and it has also broken below the moving averages, and it's possible for Bank Nifty to continue this decline on the downside and test the levels of about 43,050 to 42,945. Now this would act as an immediate support for the index, and in case that this support as well gets taken out, then Bank Nifty can probably fill this gap on the downside and test this lower end of the range. So if Bank Nifty breaks below this level of 43,000 on the downside, then a short opportunity can be looked at, and in that case a downside target towards the gap zone and the lower end of the range can be witnessed in the index. Also considering the overhead supply at the levels of 43,555 to 43,588, it's highly likely for Bank Nifty to expire below the level of 43,700 for the upcoming weekly expiry. Now, if you are a conservative and directional trader, then you might have to wait for a clear trend to emerge. Well, let's outline the possibilities for that case as well. Now, if Bank Nifty breaks below this level of 42,582, then it would call for a shorting opportunity in the index because it will have broken down this range of 42,582 on the downside, and in that case the levels of 42,352 can be looked at. Now if that happens, you can consider the high of the breakdown candle as your stop loss or invalidation level. Well, on the other hand, if Bank Nifty breaks above this zone of 43,555 to 43,740, then only we can expect some positive momentum unfolding in the index. But that for now looks a little bleak, but we'll keep the possibility open. Now let's talk about the support and resistance levels for Bank Nifty. So the support is placed at 42,945 followed by 42,582, whereas the resistance is placed at 43,555 followed by 43,740. Now let's move to stocks, starting with GNFC. So here on the hourly chart, you can see that the stock was consolidating in a range for some time, and it does look like a double top formation over here. Well, as we have discussed before, a double top only gets validated at the breakdown of the neckline, which in this case happens to be at the level of 589.10. So if GNFC breaks the level of 589.10, then a downward trajectory can be expected and a shorting opportunity can be looked at for a target of about 572 to 574, and if this setup gets triggered, I will be considering an invalidation level of about 605. Let's move to the update on Britannia on the hourly chart. So we discussed Britannia in yesterday's video for a long opportunity above the level of 4610, which got triggered, but there's a lack of momentum in the stock due to the supply pressure coming from the higher levels. So one should consider maintaining a tight stop loss at the levels of 4572 even if Britannia takes a nosedive. Let's talk about UPL. On the weekly chart, you can see that UPL has been respecting the descending trend line, and we also have a harmonic pattern which has been triggered at the breakdown of pivot B at 707.50. Now if we take a look at the daily time frame, you can see a fierce decline, and we know that the market never moves in a straight line. So it's possible for the stock to pull back on the upside towards this level of 725, which might be followed by selling pressure once again. So here a favorable risk to reward shorting opportunity would open up at the breakdown of this level of 686, and in that case UPL can drag towards the downside levels of about 635 to 612. Now let's talk about ICICI Bank. So if you remember, we discussed ICICI Bank at the polarity zone of 878 to 882 for a long trade, and here you can see that ICICI Bank has beautifully tested the 940 mark on the upside, making it a 1:3 RR trade. Well, now you can see that ICICI Bank is at the harmonic reversal level of 940, which also happens to be a very strong resistance level for the stock. So it's time to be a little cautious in ICICI Bank as a reversal is likely over here, and it might as well test the downside levels of 920 to begin with. Now here I will be considering an invalidation level of about 960 for the short trade. So there have been a lot of queries around Tata Power. So let's take an overview of the same and discuss any potential trading opportunities as well. So here on the weekly chart, it does look like a breakout of the descending trend line, but the volumes do not look very convincing. Well, on the daily chart, the stock has been trading within an inside bar in the range of 199 to 205. So if you're looking for a trading opportunity, it's best to sit out and wait for the price to trigger a move on either side so that you do not get caught on the wrong side of the trade. Now, in case of a breakout on the upside at the levels of 205, the stock can immediately test the levels of about 212 with an invalidation level of 199. Now, in case of a breakdown of this level of 199, the downside levels of 190 to 192 look very likely. Well, as I just mentioned that it's a wait and watch setup, so it's best to let the setup develop and trigger in either direction. Well, on that note, it's Gurleen signing off. Until we meet again, have a good time.